Welcome back to this lesson. In this lesson, we'll be able to learn. We'll be studying buy stops, and also buy stops are also buy side liquidity. So they are orders which are residing above current market price. And what we mean, or what I mean, is they are orders or liquidity or stops at swing highs, daily highs, session highs, any swing high that you can find where market comes, run it, and then reverses into the opposite direction. So let us look at example of buy stops in the market. So buy stops are, we have said, they are orders that are residing above current market price, above swing highs. Yes. So in this daily chart of the dollar, we have so many examples. Like I can see, like there's one forming here. We get a run, we get a swing high, we have a swing high. Let me draw using this trend line. So we have a swing high that these, I've said these are buy stops or buy side liquidity. You can also say buy side liquidity, BSL. So you can see that when we created this high, we had this swing high. So there is a lower low. The next swing low or swing high below this high is lower than this candle's high, and the opposite side. So on both sides, we get that we have swing highs which are below the highest high of this candle. So we can see that even in this day on the 20th of October, this swing high did not run above, or we did not get a run above this swing high. Instead, we just created relative equal highs. So this is what essentially we want to see in the market. When we see, even we can see either one, or we can see also that this daily high, the next one, they were just slightly lower and did not go above this swing high. But when we came and ran this swing high, and in the running of these buy stops, we don't want to see that the market is running above it with more than, let me say, an average of 10 to 20 pips. You don't want to see a run above that high with more than 10 to 20 pips. So let me go and use the euro dollar or pound. Let us use the pound dollar for this one. So you can see even this is a swing high. So I have said that the swing high is when we have on the left side and on the right side, we have highs which are below this high of this candle. So even this one did not make a higher high. Instead, it was below. So this is also a swing high, this one. So also depending on I have said that depending on this buy stop, we don't want to see a run above that high with more than 10 to 20 pips. But I can say also, depending on this pound usually has a high volatility rate compared to the euro dollar. So it's up to you to be able to determine, because I think there's a high probability that this passed or surpassed it with more than 20 pips. Yeah, almost, let us say 40. Yes, 40 pips. but we don't, depending on the volatility of that pair, we don't want to see, for I think for euro dollar I've seen you don't want to see more than, let us say 10, 20 up to 40 pips. So even this one I can say 10, 20, 30 up to 40 pips. So this is a buy stop. Let us see here also, did we get a run above, did we run stops for us to say this is a buy stop? Yes, we can see that it just poked. We also want to see something like this, then immediately we reverse to the opposite direction. See, so this is a buy stop. In the lower time frame, let us go to the 1 hour. Here we have a very good example. First let me say that there are two instances. So this was the first one. We can see that this was the daily high. So I think what makes it easy for me to be able to understand a buy stops is when either it's a daily high, it may be a daily high in which the daily high of that day was run, then a market immediately reverses. It may be a session high, it may be, yeah, so for this next one, it was a session high because it was a London high. So this high was made during, this swing was made during London. So but this one was a previous day's high. We ran above it, then market ran lower. Immediately we came back again, ran this session high, then immediately reversed. Yeah, so there are many examples like this one. I can see it's also a swing high, a daily high. We can see that we poked, then immediately the market, did we get a break in structure? Yes, market moved lower. The next one, so I've said it's a swing high, session high, swing high, daily high, monthly high, weekly highs. Yes, so even this one was a daily high. We got a run above it, then so these above here, they are buy stops. There's buy side liquidity, they are buy stop, they are orders which are pending. We can see that also the market consolidated before running higher, then back down. Even here we can see that there's this swing high. This is a session liquidity because it is an Asian high. So these are buy stops. Let me write buy side liquidity or buy stops. So buy side liquidity or buy stops, session highs, we came, ran above it, not higher. We did not move dynamically high, but just a little bit, then immediately the market made a dynamic move opposed to the current structure or price movement that we were seeing. Then the market collapsed. So there are many instances. Just go and look for examples, and so that we may get familiar. Yes, see you in the next lesson, and thank you for listening.